Hello everyone, this is Dr.Mihir Shah once again with another video. In this video, we're going to solve basically April 2025 university question paper under the subject direct taxation. Again, a very important video for all the TYBMS Sem 5 students. So in this video, we are going to take up all the practical problem sums that had appeared in April 2025 question paper and then try to solve them in the most simplest and easiest manner. So chalo, let us start and check what all question had appeared in this question paper and how to solve them in the most simplest manner. The very first question, Mr. Honey was brought up in Canada in the year 1995. He came to India for the first time on 11th May 2019 and started doing his business in India. He went back to Canada on 15th August 2023 and attended his sister's wedding. He again came back to India on 10th December 23 and returned back to his country Canada forever on 28th March 2024. They are asking you determine his residential status for the assessment year 24-25. Now 24-25 is the assessment year, so the previous year will be 23-24. So we have to first calculate the previous year ka days and all, and according to that we'll have to find out his residential status firstly. So we'll start off this way, that Mr. Honey will be a resident of India if he fulfills the following conditions. Number one, he is in India for 182 days or more in the previous year, or 2A, he is in India for 365 days or more in the past 4 years immediately preceding the previous year, and he is in India for 60 days or more in the previous year. So out of these two, any one of this rule has to be fulfilled by him. Now based on the computation, remember we have to take for the year 23-24. Okay, so he came in 2019. He was there in India since then till 15th August 23. We want from 1st April till 31st March, 1st April 23 to 31st March 24. That is our previous year. So you have to calculate the days in between those periods. Okay, so computation is for 23-24 from April to March. So he went on 15th August for his wedding of his sister. So before 15th August he was completely in India. So April in India, so 30 days in India, May, June, July and August 15 days, because on 15th he left. Okay, so September, October, November he was not in India. Then he came back to India on the 10th December. So from 10 till 31st, 21 days he was in India. Jan again he was in India. Feb again he was in India. It's a leap year. Okay, it is a leap year. Feb 24 is a leap year. 24 was a leap year. March 28th he left again back. So till March, 28 days of March. So we added up, we got 246 days. Okay, so April, May, June, July, August ka 15 days, September, October, November not in India, December only 21 days, Jan 31 and Feb 29 and March 28. Added up, the total days came to 246. The rule is first rule was he has to be in India for at least 182 days or more in the previous year, which is able to fulfill it very easily. So we can give a conclusion stating that Mr. Honey was in India for 246 days in the previous year, therefore he is a resident of India. Condition 1 is completely fulfilled. So Mr. Honey is a resident of India. Now the rule comes, if he is a resident, now we need to find whether he is an ordinary resident or not an ordinary resident. So under ordinary resident, now we'll first note on the rules. So computation for ordinary status. So Mr. Honey will be ordinary if he is in India for 730 days out of the past 7 years immediately preceding the previous year, and he is in India for 2 out of 10 years immediately preceding the previous year. If you're calculating days, then 7 years ka time you get. If you're taking complete years, then 10 years ka time you get. 2 years, 730 days both means the same, but the period, the way of calculating is different. Okay, so what we do now here, immediately preceding the previous year, so ignore the previous year. So 23-24 we ignore it. So we go ahead of that. So that will become 22-23, 21-22, 20-21, 19-20 and so on. So we'll take the previous. But see, he came first time to India in the year 2019 May. So 1920 onwards he was in India basically, not before that. So computation mein, okay, 18-19. So he was there in India from 1920, 20-21, 21-22, 22-23. 22-23 full year. 21-22 full year, 20-21 full year. From 1920 he came from 11th May. So April he was not there and May ka 10 days he was not there. So when you remove those 40 days, what remains is 325. Total it up, we got 1420 days, which is more than 730 days. Okay, So the rule state was he has to be there for at least 2 out of the 10 or 730 out of the past 7 years. The period is coming way more than 730 days. So he is an ordinary status. Okay, he has an ordinary status. So final conclusion, we can write that Mr. Honey was in India for more than 730 days in the past 7 years. Okay, therefore he is a resident and an ordinary resident. Okay. So this is how you all had to solve the very first question, which was based on determining the residential status of Mr. Honey. So you all can go through it once. Okay, chalo, now let us check the next sum. Along with this, like it was question number 2 or question number 2 was from the following information of Mr. Jay for the previous year 23-24, compute his gross total income. For the assessment year, if he is a resident and an ordinary resident, resident but not an ordinary resident, and non-resident. And they have given us the conditions. Now always remember, there are 3 conditions which you have to remember. If income is generated in India, everyone will pay for it. If it is controlled, set up or managed from India, first 2 people will pay. Foreign income, the first person will pay. If it's an agriculture income or past profit, no one will pay. Based on these 5 rules, you can easily solve this sum. Okay. So in order to solve, first we note down all the particulars, and then we'll start one by one. First was income from business in Sri Lanka controlled from India. The rule was if it is controlled from India, the first 2 people will have to pay. So 1,50,000 will be taxable for that income will be available for ROR and RNOR. Income earned and received in Canada. So foreign income, only the first person will be paid. Salary earned in New York in the past. The moment past comes, no one has to pay. It's nil. Dividend from foreign company, 50% received in Germany and balance received in India. So the one which is received in India, everyone has to pay. So 50% is 90,000. 90,000 will be paid by everyone, but that extra 50% is only paid by the first person because in Germany, foreign income. So in short, 1,80,000, the full amount will be paid by ROR because 50% being in India and 50 foreign doesn't matter, has to pay tax. For the others, it will only be 90, 90, 90. So for foreign, for Germany, it was only 90 for ROR, and for the remaining 90, everyone will pay for it. Next, income from agriculture in Nepal, 1/3 is received in India. 1/3 is 90,000 ka 1/3 is 30,000. Anything which is received in India, everyone will pay. So 30,000 will be paid by everyone, but the other 2/3 which was in Nepal is foreign income that will be paid by ROR. So eventually ROR has to pay full 90,000. The other one will have to pay 30 and 30. Next, royalty from a company in Singapore received in Meghalaya. Okay, now Meghalaya being in India, everyone will pay for it. Interest credited to HSBC Bank New York branch, foreign, so only the first category. Interest on UK development bond received in India, everyone pays for it. Okay, so this is as simple as that. You just have to put it in the correct order, and now we just need to total it up. So when you total the first column, the total came to 10,31,000, next 7,20,500, and third was 5,70,500. That is nothing but our net. See, they asked you to find the gross total income. So this is nothing but our gross total income. This is how you all had to solve question number 2 ka second sum. Okay? Chalo, you all can go through it once. Okay, chalo. Now let us jump to the next. So this was question number 2 with option. One was based on scope, the other one was based on residential status. Chalo, let us see what was the next sum. Question number 3. Mr. Ramanand is a physically disabled person. 50% is disability. I'll just mark all the important points which are given in the question. It can be used later on. He is employed with Reliance Private Limited, so it's private company. He gives you the following information on 31st March: basic salary, bonus, entertainment, house rent, conveyance allowance, perquisites and professional tax deducted. So all these things is based on income from salary. Other information when they are giving you interest received, dividend, interest on saving, that is income from other source, gift from friends, again all these things have been given. The one what I have underlined, that is basically like a kind of a deduction which can come later on. So they are asking us to find is taxable income, net taxable income. So the sum will be divided in three parts: income from salary, income from other sources, and deduction under chapter 6A. The total what we'll get will be known as net taxable income. So we'll first start off with income from salary. Okay, so income from salary means the very first thing what they're giving you basic salary 60,000 per month. So I'll write your we'll write your status, name, assessment year, previous year particulars. The heading will be computation of net taxable income. First is basic salary 60,000 into 12, which comes to 7,20,000. Next is bonus 25,000 a month, so bonus 25,000 into 12 comes to 3 lakh. Entertainment 8,000 a month, so 8,000 into 12 comes to 96,000. House and allowance 20,000 per month, so 20,000 into 12 was 2,40,000 minus 60,000, which comes to 1,80,000. Whatever is exempt, minus it. Conveyance allowance 4,000 per month, so 4 12s are 48, minus 20, so that comes to 28,000. Perquisites are all taxable, 24,000 per annum fees, so we noted down, we added up, we got the value as gross taxable salary 13,48,000. So we just taken what things have been given to us. Okay, see, these are other information, the other information not part of salary. Okay, so we just note down all the things which they are given us. We got the gross value. Now less deduction under section 16. We have two deduction. One is standard deduction, which is fixed 50,000, and second is professional tax. So standard deduction 50,000, professional tax 2,500, deduction under section 16 under salary head. So negative 52,500 goes outside. You minus, we got 12,95,500 as a net income from salary. This is Roman number 1, income from salary. Now, once you all have understood this, okay, now we can go ahead and we'll go with income from other source. Now let us check what all income from other source. Interest received on government security, yes. Dividend, yes. Interest on saving bank, yes. Gift from friends, amount 50,000. The rule is gift from friends, non-relatives, more than 50,000 only then it is taxable. If not, not taxable. So this amount is not taxable. It will not appear anywhere in the question. So we have 3 income from other sources: income from interest on government security, dividend from HDFC Bank mutual fund, and interest on saving bank. 25, 15, 20. Total comes to 60,000. We add up 12,95,500 plus 60,000. We got a gross taxable income 13,55,500. So 2 parts are done. Last part is deduction under chapter 6A. Let us take what deduction we can ask. See, if the person himself is disabled, ATU, percentage less than 80, so 75,000 ka claim. Okay, 75,000 ka deduction can be claimed. Secondly, interest on saving bank comes under section TTA, maximum limit 10,000. 2 deductions can be seen in the sum. So deduction under chapter 6A, under section 80U, 50% disability 75,000. Section 80 TTA, saving bank interest 10,000. Total 85,000 in the outer column negative. So 13,55,500 minus 85,000. The net taxable income comes to 12,70,500. This is how you all had to solve the sum based on total computation of salary, other source, and deduction. Chalo, you all can go through it once. Okay, chalo. So I hope everyone have understood that this was question number 3. Now let us check what was the another question in opposite to this particular question in option. So Mr. Nikhil is a physically disabled person with 90% disability. I'll mark that. He is employed with Ganesh Printers, again private limited. He has given you his details. So again, see, basic salary, DNS allowance, commission, entertainment, traveling allowances, conveyance allowances, professional tax. These are all again income from salary details. Winning from lottery, interest, receive interest. This is again income from other source. So it's similar to the previous question. So salary was an option with salary in this particular paper. So chalo, we'll start off. First was basic salary 30,000 per month. So basic salary 30,000 into 12 came to 3,60,000. DNS allowance was 20,000 a month. So 20,000 into 12 came to 2,40,000. Commission was 10% of basic and DA. Basic 3,60,000. DA 2,40,000, total comes to 6 lakhs. 10% of that was 60,000. Entertainment allowance is 60 to 500 per annum directly, we will take it. Traveling allowance is 60,000 per annum, but exempt is 12,000. They're giving you the exemption, so you minus and you put it down 48,000. Conveyance allowance is 48,000 and amount spent on official conveyance is 46. So 48 minus 46, 2,000 is the conveyance. We add up everything, and then professional tax that come later on. You add up, we got 77 lakh. 7,72,500. Deduction में two deductions are there. Standard deduction 50,000 and professional tax 2,500. Outer column when you take it and we subtract, we get 7,20,000 as income from salary. That's the first part of the sum. You all can go through it once. Okay, the second part will be income from other source. Winning from lottery, yes. Interest on saving account, yes. Interest on Kisan Vikas Patra, yes. So three incomes are there: winning, interest on saving, and accrued on Kisan Vikas. Add up 30, 25 and 5, 60,000 outer column. 7,20,000 plus 60 is 7,80,000. That's gross taxable income. Under deduction, two deductions are there. I can see one is 80U. 90,000, which is more than 80%, so 1,25,000 ka deduction you will get, and interest on saving bank, which comes under TTA, but the limit is only 10,000. So under deduction under chapter 6A, section 80U, disability is 90%, so 1,25,000, and TTA saving bank interest 10,000, outer column 1,35,000. So 7,80,000 minus 1,35,000, the net taxable income comes to 6,45,000. This is how you all had to solve this particular question, which was based on again computation based on salary, other source and deduction. I hope everyone have understood this. So you all can go through it once. Okay. Chalo, I hope everyone have understood question number 3. Now let us go to the last practical question, that is question number 4. When there are two parts, question number 4 or question number 4. Fifth one was the theoretical part, so that will not be in this video. So let us check question number 4. Mr. Sagar acquired a residential house in Jan 20. Oh, okay, no. Remember, in this particular question paper, question number 4 had multiple errors. Okay, first I'll just read the question and then tell you what all changes we need to do in this. Mr. Sagar acquired a residential house in 2023 for 12 lakhs and made some improvement by way of additional construction, incurring expenditure of 2,50,000 on September 3rd, September 2023. He sold the house in October 23 for 95 lakhs and paid brokerage 70,000, and he acquired another house in this. So now issue is 23 May he has acquired. Okay, that cannot be a long-term capital gain because so this date was supposed to be there was an error in this date. This date was supposed to be 2003, and this was also supposed to be 2000 and this is supposed to be 2004-5. Okay, so that would have been actually 2005. No, September 2004. This was supposed to be 2004 ka date. So just make correction in this question. This is 2003 and this was 2004. So 2003 comes under the first CII, 2004 comes under the second CII. There was no detail relating to the third CII in the question. Okay. So based on the correction which I made, we will be solving this particular sum. So the long-term capital base ka sum is based on, first you always start with sale less any transfer, that will give you net sale consideration. So first sale consideration, you sold the house for 95 lakhs, brokerage paid was 70,000. So 95 lakhs minus 75,000 is 94 lakh 30,000. That's a net sale consideration. After that come less index cost of acquisition. We have acquired the house for 12 lakhs. Previous year ka CI was 348 and the year in which it was acquired was the CI was 105. So based on that, let's index cost of acquisition 12 lakhs into 348 upon 105. We got the value as 3977143. now in the exam, remember, first you will note down the formula also. So index cost of acquisition is cost of acquisition into CI of the previous year upon the CI of the year of acquisition. After that comes less index cost of improvement. Similar way, cost of improvement was 2,50,000, CI will take it at 113 and previous year was 348. So less index cost of improvement 2,50,000 into 348 upon 113 because the date ka error. Okay, so we got the value as 7,69,912. You add up both, it comes to 47,47,055. The rule is say less. You have to less all these things. We'll get long-term capital gain as 46,82,945. After that, we need to less any new purchases that we have made under section 54. A new house has been purchased, so purchase of residential house under section 54, 21 lakhs. You subtract and you get the final value as long-term capital gain of 25,82,945. This is how you all have to solve the sum based on long-term capital gain. So I hope you all have understood that. You all can go through it once. Okay, chalo. Now the last sum which was against or opposite this particular question was Mr. Rahim, who is 30% physically disabled, noting it down, 30%, provides the following information for the previous year ending 31st March. You are required to compute his net taxable income for the assessment year. So now they have seen, since P&L account is given, it becomes income from business and profession. We'll just mark the adjustment. First is depreciation. So I'm marking depreciation. Advertisement, I'm marking advertisement. Salary, I'll mark salary. Medical insurance for himself, that comes later on deduction, and 1/4 for personal car, so motor car I'll mark. Okay, so wherever I have marked the adjustment, whenever we come across, we have to start. Now, such kind of sum, now this is again total taxable income where we need to find. So this is based on business and profession, other source and deduction. Under business and profession, the sum will always start with income, the net profit that they have given us. So net profit as per P&L, 8,66,000. Next, add expenses disallowed. So we wrote add expenses disallowed. So in this, all those expenses which are not business related will be considered. So we'll go one by one based on expense. Office rent, no adjustment. Office expense is a normal business expense, will not come in the sum, ignore. Salary is also supposed to be a normal business expense, should not come, but then there's an adjustment. Salary include 20,000 which was withdrawn by Rahim for personal use. Personal use, any personal expense is not allowed, comes under disallowed. So salary 20,000 we have noted down. Okay. Next is advertisement, normal business expense, but there's an adjustment. Advertisement include 25,000 as advertisement in souvenir of political party. Political party souvenir not allowed, disallowed. Advertisement 25,000 will be taken into consideration. Motor car normal expense, but they have given you 1/4 of the car is for personal use, so we'll take 1/4 of 1,20,000. That comes to 30,000. So motor car for personal use, 30,000 disallowed. Income tax personal disallowed. Printing station and normal expense won't come. Conveyance normal expense won't come. Now when there are two depreciation, one in the question, one in the adjustment, the question comes in add, so 70,000 depreciation. Donation is personal, so again it comes 50,000. Total comes outside 2,47,000. So these are all the expenses, which are disallowed, which we'll need to add. Now after that come less income disallowed. So income mein GP is supposed to be a normal income, will not come. Depreciation ka second effect we'll just first note down here, 60,000 from the adjustment. Interest on bond, dividend from foreign company, nothing to do with business, both are disallowed. So 60 and 70, total 1,90,000, but since it is less, so negative. 8,66,000 plus 2,47,000 minus 1,90,000, that becomes total income or total income from business and profession, 9,23,000. After that, deduction, so this is your Roman number 1, income from business and profession. Second is income from other source. The other source may only have to look at the credit side. We can see two things, interest on bond and interest or dividend from foreign company. So interest, income from other source, may we have interest on bond 60,000 and dividend from foreign company 70,000. Total it up, it comes to 1,30,000. So income from business and profession plus income from other source will give you, your gross total income. Okay, less deduction under chapter 6A. Now how many deductions can be seen here? See, one is medical, 22 plus 8, 30,000. Thus under 80D, maximum limit is only 25,000, so 25,000 ka deduction we have given. Physically, now if you get physical disabled of 30%, the rule is any amount, percentage which is less than 40% cannot get any deduction. So 30% disability will not get any deduction, so there's only one deduction which I can see here. Okay, so that's it. So, net profit, you add, you less, you got total income, you add the income from other sources. So 9,23,000 plus 1,30,000 minus 25,000 will get you 10,28,000. That is your net income, your net taxable income. So I'll just write your net taxable income. Okay, so this is how you all had to solve the sum based on business and profession, other source and deduction. I hope everyone have understood this. You all can go through it once. Okay, so with this we have completely solved April 2025 question paper. I hope everyone have noted it down and everyone have understood in the most simplest manner that we had to solve this. Chalo, with that we will be ending this video here. Thank you.